Hello, trading is closed on June 29th, 2016. Yesterday I gave some short-term and long-term predictions. The short-term prediction, I got carried away by the Hobson close right at the high, and I said that almost always that leads to a gap lower when we open. This wasn't one of those days. It's a good thing I have a rule that says if we gap sharply in the undesired direction, the call is killed before the open, so we don't have to risk any money on it. We'll come to the longer term predictions in just a minute. Here was MEJT. It says this rally is a false move, gives us a target of 2063.10, most likely to print tomorrow, and that's my call. This is a pattern which almost always closes at the high of the day. When it does not close at the high of the day, it's usually negative, unless we gap up when we reopen. It's particularly negative when you can't go over this high here. It would have been more negative had we been able to close under this, but you don't really have to have it. About 80% of the time, this will close at the high of the day. This wasn't one of those times. Now, it's true that after we closed, we gapped up in futures immediately and traded over 2074. But that's not good, because it just shows that the public was willing to buy immediately after liquidity dried up, and the pros weren't there to take the other side of the trade. Public wanted to buy and the pros didn't. Now this could all change if we gap up tomorrow, and that's always possible. But let's go over all the resistance there is at today's high to see why that's not that likely. Here was the chart I've showed a few times. I said yesterday I thought we'd piddle around between 1992 and 2035. That was killed at the open. The next level is 2073.25. Today's high was 2073.13. So we stopped right on the nose and also right on the nose of the trend line of this triangle. So we stopped in a straight line move up to resistance. Usually that means you either gap up over it or the resistance holds. That isn't all the resistance there is. Can, so I'm told, like to divide things into thirds. Here's the recent drop. You'll see how 2/3 of the way down we have the initial drop, and 2/3 of the way up we have today's high. It's more resistance. Here's our sequential and combo sell signal. We have a combo sell signal, bar 13 over here. We have a 9-13-9 sequential sell signal with bar 9 finishing early, also on the 15-minute chart. The longer term picture was that this was blue A. We don't have three waves for blue B, but the question is this A of B? Well, we stopped right at a 61.8% retracement of the recent drop from this high. If we have blue A down here, it's possible to count an ABC up, and wave C is a Fibonacci percentage of wave A. The only problem is on the 15-minute chart, it isn't easy to count all the subdivisions of these waves. However, if you go to a 5-minute chart, it's not so hard. Here's your ABC for A. Here's your ABC with the subwaves A and C equal to each other for B. And if this is ABC for A, and that's ABC for B, we have ABC for C, and wave C, here's your 38.2. Wave C is exactly 100% when wave A is 38 0.2%, so that's a 261.8% extension. So we have a lot of resistance right at today's high. We have a lower MEJT target, and even though futures gapped up immediately, it wouldn't surprise me if we opened up by going down and this low held, and I mean low held, if this high held. There's a lot of resistance at this high. If we gap up sharply, I'm just wrong, that's life, but I think we're going to drop tomorrow. I have an initial target of 2063.10, and if in fact this is the end of wave A of B, as I showed earlier, we could drop a lot lower than this, and that's today's call.